If you can give a background about that, that would be great.
So, the history is 200 years old in the world. So if you give me 2 minutes to do it, I'm going to have to capture it pretty fast. But it all started 200 years ago in the United States of America. And we'll fast forward to India, where sometime around about 1990, a UK-based bureau wanted to come into India. Now, before that, as many of the bankers will know, data sharing was privy through the RBI, and you got whatever good and fit data report from some bank if you made a reference. In 1990, when that particular bureau came into India, I was there at that meeting. The decision was that India didn't need a credit bureau, surprisingly, pretty short-sighted as a. Also, the decision was that technology in India at that time had not advanced adequately to allow for that to happen.
Okay.
And a lot of public sector banks and all were saying, we don't need this data, we're fine. Fast forward 10 years later, when the TransUnion and Dun & Bradstreet came into India, by which time some of the foreign banks and the Indian private sector banks had seen and experienced how bureaus are advantages to lending. And therefore, the decision was that we should start a bureau. And that's how State Bank of India, HDFC, and the two foreign partners I mentioned decided to start what is now CIBIL and therefore now become TransUnion CIBIL. So that was the first bureau that started. Obviously, there were legal issues for sharing data. And we worked very closely with the RBI to draft what is called the Credit Information Companies Registration Act, which finally got passed in 2005, which allowed banks and all to share data, credit institutions to share data with licensed bureaus. By which time there were 3 more licenses that were approved besides CIBIL. So we have Equifax, Experian, and Highmark in India now as the 4 bureaus that exist along with TransUnion CIBIL. And it started with filing suit-filed accounts. And then, of course, the bank started giving data. And so that's the 2-minute history of the credit bureaus in India. And for everybody's reference, hopefully this year, I'm going to write a book. And the first chapter is going to be the credit information history in India. So I will give you a signed copy of that book when it's ready.
Super. Thank you so much, Satish. And what is the role actually they are doing it for the financial services industry, Satish?
So,
that's part of credit bureau is concerned, right? Yeah.
So I think the first thing, and everybody knows this, but it's important to state it, that a credit bureau is not a credit rating agency and vice versa. So a credit rating agency will give you an opinion. It will give you a rating, which is AAA or all the alphabets that CRISIL and ICRA and all of them do. A credit information bureau is exactly what its name says. It's credit information. So it reflects your payment history because as the classic adage goes, past behavior is the best predictor of future behavior. Now, today with technology, the way it has developed and various developments have taken place, I think data is the new oil. And somebody very famously said this to me, that you have to torture data to make it confess to you, right? So basically, I think the way lending happens in this country, and I've seen it now for such a long time, has completely changed with the advent of various aspects of technology. Of course, credit bureaus being the pillar on which this whole thing has worked. So now you get emails which say, get a loan in 5 minutes, and money talks about disbursing a loan in 10 minutes. All this can happen because of technology and because information is available. Today, if I want to know whether money is paying his loans on time, I just have to pull a bureau report and I'll get information. I don't have to depend on money's honesty or dishonesty to give me an answer. And I don't have to depend on other banks because all the banks are giving data to the bureaus and I'm just accessing that report, that score, and of course, a whole lot of value-added products. So there has actually been a paradigm shift in the way lending is happening in India, thanks to the credit bureaus that have come up and have matured. They've been around for 20 years now.
Okay, it's been 20 years, is it?
Yeah, so 20 years since CIBIL started, and then the other one started in 2005, 6, 7. So yeah, effectively the first bureau started in 2000.
Okay. And is there any country who's not having credit bureau, Satish?
Well, I wish I had a very clear answer to that. And I tried to, when I saw, I thought, let me see this. But I would say effectively every country in the world has bureaus. Every country. Now, there might be one country somewhere deep inside Africa, for example, which might not have an economy adequately developed. But to give you an example, and this is not a derogatory remark because I have personally been involved with setting it up, even a country as small as Bhutan has a credit bureau.
Okay.
I actually established that bureau and then we upgraded it. So I know that Bhutan, which has got such a small population, and five banks and, one telecom and one insurance company has a credit bureau. So the short answer to your question, I think every country in this world has credit bureaus. There might be one.
Okay. Got it. And as far as India is concerned, who is regulating these credit bureaus, Satish?
The Reserve Bank of India. The Reserve Bank of India is the regulator and licensor of all these bureaus. And their authority to license and regulate and inspect is driven from a law which is called the Credit Information Companies Registration Act, passed in 2005. As laws go, it's a pretty small document, unlike some other laws that can be longer. And so that enables and arms the RBI with all the powers to license, regulate, monitor, and inspect credit bureaus. So if you want a license, you have to apply to the RBI for a license, and that window is not permanently open. It's like the tap is closed right now. So the RBI is the regulator for all credit bureaus in India.
So coming back to the lending institutions, right? So in day-to-day life, without pulling the credit bureau report, the lending institutions' life will be incomplete, correct? So on a day-to-day operations, everybody, including a loan officer, being a credit manager, everybody will be seeing the report. So the next question would be like, how do basically lenders uses the credit report?
So, a lot of people still call me and say, my loan got rejected because the bureau reported a bad score. Now, the bureau is reporting what is a fact. They are not changing data. So if money is not paid his loans on time, he's not paid his loans on time. There's nothing the bureau can do. So today, lending institutions, all of them, have built credit report usage and scores into their credit policy. So they will say that, it must be a minimum score of X, and each company has its own, each lender has its own risk appetite. So they define that and they look at data and they say that, okay, X score is good and Y score is not so good. And that enables the lender to strengthen his decisioning based on information. Of course, you look at salary slip and balance sheet and P&L and tax returns and all that when you do a consumer loan, and likewise when you do a non-individual loan. But this gives information about past behavior history. It is then for the lender to decide whether to give money a loan with a score of X or not to give him because his score is Y. And each lender will have different scores. The good news recently that has started, and I'm very happy to see this because I've been advocating this for years, is that even some of the big lenders have now said that your interest rate is linked to your score. Now, that is something I've been talking about for 20 years, that ultimately, even with a low score, you can get a loan, but the price is different because the interest rate is this thing. So I think it's an industry that's evolving, and it's evolving pretty fast compared to the way the industry in the US evolved over 100 years, because there's a lot of catch up that we have to do. So every lender uses not only one, sometimes even two bureaus. And of course, as the ticket size gets bigger, the stakes get bigger. So a housing loan, for example, the ticket size is much bigger. But the point is to build it into your credit score, into your credit policy. And that will decide whether to get a loan, not to get, what terms to get. So you and I can both get a loan, but if your score is higher, possibly your rate might be 10 bips lower than mine is. Because your risk perception is lower because you behaved well in the past.
Okay, got it. And so one is on the individual who's taking the report, right, Satish, and another set of group is the companies, right? So the companies who's also taking loans. So that is a commercial bureau report, right? Can you give a brief on that, Satish?
Yeah, sure. So the easy way is to not call it a commercial bureau, but to call it a non-individual report. So anybody, so a private limited company, an LLP, a public limited company, anything that's not an individual and has borrowed from the lending system their data is also in these 4 bureaus. So you should know that now RBI has mandated that all credit institutions have to give all data to all the 4 bureaus. You can't choose which one not to give to or something. So just as in a consumer report, you will get, say, Mani's details about his PAN card and his address and his telephone number and his date of birth and all that. Similarly, if a company applies for a loan and then the the lender wants to pull a report, they will get what is a commercial report. The core of that commercial report is not different. There will be there'll be identifiers about the company. So instead of a date of birth and gender, you might have the registration number of the company or the PAN card details and things like that. Then, of course, you will get loan payment details and is it a working capital loan and is it a term loan and all that. But you will, in this case, also get names of the key stakeholders like the directors, or if it's a private limited company, the shareholders. So that gives you a more holistic picture. Now, I should just add one. I don't know this question, I can anticipate, but here it is. In a private limited company, like for example, take Athena, for example, right? As different from, say, a Bajaj or a Hindustan Lever. The company, Athena and Satish Mehta, are intertwined completely because it's a private limited company. I own it and I'm not listed. So if somebody comes to you for a loan for a company of that kind, it would be prudent to also pull a report on the main person who's running the company. In this case, for example, me, right? Because then you know, because if I'm not paying on time, the possibility of the company also not paying on time is a little higher than what it is. So if I'm a director on, say, Hindustan Lever, there's no connection between my individual payment history and the company's payment history. I don't have any control over that.
So this is irrespective of partnership or private limited, is it?
Everything is in there. Every bank has to report that data. So if you're lending to an SME which has borrowed in the past and they come back to you for a loan, or you want to review their portfolio, all you have to do is pull what is called the commercial report.
Okay. And one example which I wanted to highlight here is when I pull a report, right? So there are certain inconsistency between the other bureau reports. Say, for example, if one report saying I'm having an active loans of 5, and other bureau report is saying I'm active loan of 4, right? Why there is an inconsistency is happening, and how the data can be accurate? Is there any suggestions on that, Satish?
So the way it is structured, all the banks and the lenders, NBFCs, HFCs, have to give the same data to the 4 bureaus. And there is a fixed format in which it has to be extracted. And even if it is extracted separately, the bureaus will convert it into their standard format and through a middleware and take it into their system. Now, the question that you ask is, what happens and why is it that Bureau A is showing 5 loans in my name and Bureau B is showing 4 names in your name?
Right.
Obvious answer which you will get if other bureau, you talk to the bureaus, is they will say the timing of the reporting, in between that, money took an extra loan, and therefore that loan is not reflecting in our bureau, which is possible. The other possibility is that they've got the data, but they've not yet uploaded it, because that takes a process of a couple of days. And if you fall in between the time that they send the data and you pull the report, again, there can be a problem, which is why when the tickets are a little larger, some of the lenders pull 2 reports, one from one bureau and one from the other, and compare the 2. The other reason is that if the data capture at the bureau, at the bank or the lending institution is not accurately done, and that data is fed in, then the deduplication logic at the bureaus can have some variation. So if your name, for example, is Mani Parthasarthi, and in one case it is spelled with a Y and one case with an I, or your date of birth, instead of being 1st of December, is 12th of January, that kind of stuff, or the data entry PAN card goes in wrong or something, it's possible that it might not extract that particular data because that is matching with the inquiry. Now, having said all this, ideally, this should be more the exception than the rule. That, there's an inconsistency between 2 bureau reports if they're pulled, especially on the same date.
Is there any percentage of inconsistency between the reports? Any rough approximate percentage that you can throw?
There is nothing that has been officially studied or reported. Because I don't think any of the bureaus wants to show that they have inconsistency amongst themselves. So if you ask me, I think there are sometimes 5-10%. That's a guesstimate from my side. I
Okay.
had done a study of two data packs through two
Okay.
bureaus some years ago for when I was consulting to a company, and we saw about a 10% variation, which is honestly 10% you can say is all right, but ask the guy whose report is getting messed up. For him, it's 100% mistake, So I think that, but if it any solace after so many years in the United States also, maybe not 10%, but there are still some inconsistencies that happen. So it's an evolving industry and an evolving movement towards data accuracy, data consistency, data standardization.
And another question is related to this, Satish. Like, I'm assume that I'm a lender, and every month end I'll be submitting to the bureau, right? So I'll be giving an Excel sheet to a bureau, submitting that. So what is happening in the background, Satish? Can you give a brief on that?
Sure. So first thing, let me correct two small sentences you made. First of all, some of the banks and all now not necessarily waiting for a month. They even report weekly or fortnightly also.
Oh, okay.
Because every lender on this program will tell you that information has a time value to it. And unless we have a time value and 1 month old data and all is, 1 month old data kind of thing. So it is reported frequently, obviously. The second is, I wish it was that simple, but it's not an Excel sheet. There is actually a format in which you have to specifically put the data, and the bureau will check that you have put it in that format, because the system has to absorb that format into itself to be able to add that data for that month or that period. So there is a format which has been prescribed, and the RBI has now standardized that format. Earlier, the 4 bureaus had 4 different formats. That has been kind of removed now. Sometime 2016 or 17, there was an RBI committee which recommended, and that was accepted. Now, when the data comes in, it gets stored inside the bureau's database, and there are millions and millions of records. So, for example, if there are 1 million borrowers, and that's just an example, there have to be at least 1 million records. And the reason I say 1 million is money, for example, has got 2 credit cards, a housing loan, and a car loan. So there are 4 records pertaining to this money. So it's a one-to-many mapping, so to say, if I call it that. Now, once the data goes in there, it is stored, and then when you make an inquiry, so tomorrow money applies for a loan somewhere else, or the bank on whom he has lent to is doing a review of its portfolio, they will make an inquiry on money. Now, when they do that, right, they will send that inquiry in a particular format. Now, in that format, you have to prescribe what money's PAN card number, sorry, what his PAN card number is, what is his address, what is his Aadhaar card, whatever it might be. Now, based on that, that inquiry hits the bureau database. And in nanoseconds, there is a search which pulls out all records pertaining to money, only to money, and only to this money, and not any other money. Because Satish Mehta is a pretty common. You go to Gujarat and say Satish Mehta, there'll be 10 guys who will stand up.
Yeah.
Right? If you go north, for example, a Singh is a common thing. If you go south, if you go east, you'll see Chatterjee, Bhattacharya, and all those surnames, with the standard surnames of that region. And there are different ways. For example, Satish in south is spelled Sathish, whereas in my name is Satish. There's no H there. I've tried a lot whenever I deal with people from the south, and Mani is the only guy who's saying Satish, but everybody else still calls me Satish with the H. So this deduplication logic has to be built into the bureau, and we had to educate the system to be able to search. Like a simple thing like a road. In Chennai, a road will be called Salai. Like Anna Salai you have.
Anna Salai,
you get avenues, you get road, you get path, you get lane. So there are various things that come up. So I think that is something that, and a bureau has to educate its system artificially. And this was before the artificial intelligence word came into play at all. And then it searches for money Parthasarthi and throws it out, calculates a score and produces a report. And this is literally done in nanoseconds. But again, to use another adage, you put garbage in, you get garbage out. So the quality of your record, how accurate it represents everything that money has borrowed, and the speed with which it comes out is entirely dependent on all you lenders. If the lender gives good data, you will get a good report. So if a lender feels that I didn't get a good report from CIBIL or from TransUnion, Experian or Equifax, I think you need to ask yourself, each as a group, Have we given quality data? Have we given complete data? Have we given comprehensive data? Have we given accurate data? If you've done that, then there is no reason why it should take time or you should get an incomplete or a not complete report.
Okay.
So that's what happens in the background. Now, once that has happened, all the loans identified with this money are tagged together. So the next 6th time that money applies for a loan, the system will go in and they'll be able to pull it up faster because these 4 loans in the past have been tagged under your name.
Okay.
But I think as lenders, you should worry about the accuracy of the report. But more importantly, as a borrower, you should make sure there is no reason for your report to go bad. And I am a strong believer that the credit bureau system has actually helped the industry to reduce its NPAs. It has helped the industry to improve TAT. And most importantly, it has helped the industry to grow in a positive manner and not just randomly give out loans because the month end or the year end or the quarter end is coming. Because that's like a T20. We are here to play a test match.
Okay.
Sorry, a little long answer, but I couldn't help it.
No problem. It's a wonderful answer, Satish. The database that you were saying, right, Satish, the 130 crore population in India, right, approximately, how many individual records will be there in CIBIL or in Equifax or TransUnion? Rough number, rough guess, 30-40%?
300, 400 million. 30, 40 crores already. If you look at the population of India and you minus all the minors, who are not eligible for a loan, and you take out all those people who are not in the formal sector of lending, and go to vendors in the villages and all that. And then you take out people over 70 or 75 who are now not going to borrow, but might have borrowed in the past.
Right.
So I think there is approximately, I would think about 300-400 million, but I could stand corrected. This is my last recollection from what I have. But, in a country like India, honestly, it's a big number. It probably is an aggregate of all the bureau data in the entire Europe, for example. Because, every number in India is huge because of the sheer absolute size of our population. So it's huge. It is really huge,
Yeah. And with respect to the NTC, right, new to credit, so every time the huge set of chunk is getting into more than 18 years of experience, 18 years of age, and they are eligible for a loan, correct? So can you give a brief on NTC and what are the new protocols that has been given by RBI?
So before I get to NTC, we should talk about what life was before NTC came into play. So there was, say for example, one of your colleagues who's just joined your company might not have had a credit card or any loan at all. Or he or she might have taken a loan and there's only 2-3 months of data lying in the bureau. So what you would get was a thin file or a no file. A no file means there is no data about this person. Right? Now, people can say, what does that mean? And I look at it that's a huge opportunity to lend to that person because he's zero leveraged. Right? A lot of people say, but I didn't get anything. I paid for a blank report. But sometimes it's like going to a doctor. You still pay for a clean chit. In fact, you might even pay 100 rupees more if the doctor says all is good with you,
Right.
So similarly, just because for example, I have a colleague who's sitting here with me and she, for example, has no credit ever taken, right? So some banks can turn around and say, but we don't know her credit history. And some bank can say, wow, we can give her a loan now because she's not leveraged at all. So that's what used to happen earlier. Now, as time moved on, the bureaus, and I believe 2 of them have started a new to credit score also. That score typically ranges from 101 to 200, as against the traditional score is 300 to 900, as you know. So this score goes from 101 to 200 and tells you a new to credit person on what is the likelihood of that person servicing your loans or not servicing your loans. Now, your question will be, how do they find that out?
Exactly.
So they do a profile based upon the data that exists in their database. They do a profile based upon the person's other expenses and what payments have been made and all that, and they come up with a score which is better than having no score at all. But it is obviously does not reflect that new person's credit history because there is no credit history to go by.
Okay.
So it's a new concept, and I think banks see the real magic is not going to be about getting accurate reports. It is the ability of the banks and the lenders to actually use them to their advantage and for their purpose. So when I started CIBIL, for example, a lot of people told me, oh, that's very good. Now we'll catch the crooks. And I say it's not about catching crooks because the delinquencies are 1, 2, 3, 5% maybe. It's about rewarding the guys who pay back on time. It's about, like for example, you go for a medical report, out of 100 people, 95 will be clean. Only 5 people might have a problem, like, in our case, defaulting. But the 95 who are clean lead to a healthier society. Similarly, here, 95% of the people are behaving well, and we know that. It's an informed knowledge that we have. The lending infrastructure, the lending environment just takes an uplift, straight away. Because now you know that money is a good repayment person, and we can give him loans or whatever it is, or give him a higher credit. So I think increasingly what we have to look at is not about catching crooks. It's about rewarding the good guys. And that's where this price differential comes in. I've been, literally evangelizing this, that, if I have a score of 800 and money has a score of 600, why should I and money pay the same rate? I'm lesser of a risk, so I should be given a lower rate. And then if my score deteriorates, you change the rate. And if money score improves, you give them better rate going forward. Because your risk of collection, your cost of collection, your risk of delinquency, default, write-off, provisioning, everything changes when you know that Satish's score is 800 and money score is only 600, for example.
Okay. I think a quick time check, Satish. I think we have crossed half an hour now. Now we can ask the audience. We got a question from Karuna. Hi, Karuna, how are you doing? Any update on if all financial institutions are reporting all credit bureaus? I think it's mandatory to be shared to all the bureaus, but in practice, what is the scenario? So this was one of the questions being asked by most of the audience. What if they fail to submit the data, right?
Well, so I think it is mandatory, absolutely right, to share with everybody. They are required to submit everything. Are they doing it? If you ask me for a yes/no answer, I'll say yes. Now, is there an exception somewhere, somebody? Possibly, but there's little that, you, the person who's asked the question, or me, be able to answer that question. But RBI in its inspection and reporting to the bureaus will definitely be acting this aspect of their diligence that they do on the lending institution, and therefore they have to report. Now, if they're completely not reporting, then the bureaus will not allow them to share data, to access reports. And they don't have a choice because it is in law that they have to share. So if you ask me from a realistic and a practical thing, yes, everybody's sharing data. Will there be an exception? It's like, when you put up a signal on the road, 99.9% of people follow the signal. There will be one rogue guy who will break the signal, but then the cops will catch him at that point. Okay. And is there any percentage to that who are not doing it? Do we have that data, Satish? No, I don't think that data is published anywhere. So I would be hesitant to hazard a guess on this one. All right. And another interesting question from Balaji. If I apply for a loan, then my credit score goes up. What if I apply parallelly to 2-3 banks or NBFCs? So if you apply for a loan, your credit score doesn't go up simultaneously. Okay. In fact, the too many inquiries against you because you've applied to 2-3 places can actually bring the score down a little, right? But having said that, if you apply for a loan and you get the loan and you take the disbursement or you get the credit card and you pay on time or don't pay on time, that is what affects the score significantly. There are, of course, other parameters, and I think one of your questions when we spoke briefly, you told me is what goes into the calculation of a score. Correct. Right? So in life, there are 2 black boxes. One is on an aeroplane, one is inside the bureaus. Right? So nobody knows what's going on there, but it's an algorithm which combines all this. So too many inquiries means you're shopping around. You're getting rejected. Right? So just because you apply for a loan doesn't necessarily mean that your score goes up. In fact, it doesn't go up. What matters is that you take the loan and you repay on time. The mix between your secured versus unsecured. Are there any write-offs? You take them. Now, the RBI has very clearly mandated that moratorium should have no impact on score calculation. That was one of the things that came out last year. So the bureaus have been told very clearly, do not influence the score based on whether somebody took the moratorium and didn't pay for 3 months or 6 months. So So to answer your question, when you apply for a loan, there's an inquiry made on you, your score doesn't change significantly. But if you have too many inquiries against you, then your score starts creeping downwards actually, because it just means you're shopping around too much. But the weightage to that is not, there's no quantified weightage, but I know that the weightage for that is much, much less than if you don't pay on time, or if you're using your credit cards, or there's a write-off or a settlement, then your score really gets messed up.
Okay, Satish. We'll move on to the next question. So one of the interesting question is Dinesh said, who can access the data from the credit bureaus? Is it open to all, or is it restricted to only the few listed companies? Can you give a brief on that, Satish?
Sure. So if you look at the law, the SICRA, which I mentioned, there are two categories that are very clearly mentioned. One are credit institutions, and they are listed there in Section 2 of the Act, very clearly saying who are credit institutions. Typically, they are banks, NBFCs, housing finance companies, some state-owned financial sector organizations. And they are required by that law to provide data to the bureaus. They don't have a choice, right? On the other hand, the second definition is specified users. Specified user, as the word suggests, are people who are allowed to access reports from the bureau. Typically, all the credit institutions are specified users. Additionally, in the Act, it is provided that telecom companies, insurance companies, stock market brokers, and all can also access it. Now, the reason that there is this additional qualification is because they are not credit institutions. So the principle of reciprocity, where A has to give data to the bureau, only then can they pull, is not applicable for these classes of specified users, the insurance company and telecom company, just for example. In addition to that, you and I can pull our own reports. So what is called a self-report. Individuals can pull your own report, self-report. The law now very clearly, and this again happened about 5 years ago, says that every individual is entitled to one free report per year from each bureau. So technically, I can pull 4 free reports, one from CIBIL, one from Experian, one from Equifax, and one from CRIF, Highmark. So these are the people who are, now for example, I want a report on money, I can't get it.
Okay.
Unless Money pulls his own report and gives it to me. Right? So or tomorrow, for example, Money, I don't know, you're looking very young. You're getting married tomorrow, your father-in-law can't pull a report on you to see whether you got the house you claim and what are your liability.
Another question is from Rajat Mehta. If all the bureaus have all the info, what is the need of for 4 bureaus? So
that's like saying, and this is a question that surprisingly has come up in the past. It's like, where is the need for 5 restaurants and 4 shoe shops and 5 cloth shops? It's good to have a larger range of. There are 5 rating agencies in the country. There's SICRA, there's CARE, there's ICRA, there is Standard & Poor, and all that. So why do we have so many banks? Why don't we just have one bank which is opening all branches? Because customers have a choice. There is a healthy competition on service, on products, and all that. Similarly, you have 4 bureaus, and the bureaus get all the same data. So there is a level playing field. What you as a lender have a choice is to decide based on price, product, service, etc., which bureau you go to for pulling your report or accessing their value-added products. You don't have a choice about giving data. You have to give it to all 4. But you can choose who to go to get a report.
Okay, got it. So another question is, Satish, from the audience. So we all know the NBFC account aggregator is going to come, right? So what will be the future of bureaus post the development of NBFC? Satish?
So, the reason I'm smiling is because this is a question that I've been having a discussion with recently with some of the other stakeholders, including some bureaus also. Now, the advantages of account aggregator, as we all know, is that my data is entirely in my control, right? I can authorize it going, and it will bring in insurance data, financial planning data, whatever I want to put in there. And I can send it to lender A, and after my work is done, I can disable that also. Which the bureaus are different, because the bureaus go from a many to one hub, and from the hub they go out. Whereas here, the account aggregator is like many to many, right? You can authorize it to go to bank A and not to B, but B, you can authorize to go to C and not to D. The difference is that the account aggregators don't store data, because in fact, they're not allowed to store data or see data, and therefore they cannot add any of the value-added products that exist today which bureaus offer. The score is a classic example of that. And as we all know, probably every bureau has different range of value-added products that they offer. Right? The account aggregator is a pure pass-through.
In any value-added services that you can explain here, Satish, some few examples that you can throw?
Yeah, so most of the bureaus have what is called fraud detection tool, right?
Okay.
And I don't know if they started here, but they have Skip. For example, let me just give you an example. Money takes a credit card and he runs up a bill of say 50,000 rupees and he throws the card away. He was in Bombay to his job and he's now gone back to Chennai and nobody knows where he is. So he has skipped. The lending institution is trying to chase money down because he owes them 50,000 rupees, but money is gone. They go to his house, they go to the rented place, there's no money there. 2 years later, money now feels confident. So he in Chennai applies to a South Indian bank for a credit card. When he applies for that, and if the first lender has subscribed to that product, the bureau will say, wait, you're looking for this money with this PAN card number? Here's his address. We found him. Right? So that's one value add. Then there are fraud detection, reporting tools where if you have created a fraud, the bank can report it to the bureaus, and that's a central database of fraud guys. So if money is created a fraud, before I give you a loan, I will check and to see if you're reported as a fraud, in which case I will not give you a loan possibly. And there are series of, so my suggestion to the lenders who are listening, talk to your bureau, the one you deal with, or any of the 4 bureaus, and you'll see mostly common with different names and structures and pricing. Choose the one that works for you.
Okay.
So account aggregators will play a role, bureaus will play a role. At some stage, there will be some overlap, and we shall all wait and see. Maybe in 2 years, we'll have a better idea to that answer to that question.
Okay. So so a few messages to audience. Please feel free to post few more questions. Right now, I'm just coming back to our existing the same set of questions what we have, and there are a few overlapping questions that we have. So like to go with the flow what we have, and we'll come back to your questions back again in another 30 minutes. Fine. So Satish, another the important question is. So when I take a report of mine, right, in CIBIL it's showing that say it's 750, but in CRIF it's showing only 700. So there is a major change from different bureau reports. Why are they different from one another? And so finally, how to arrive a conclusion based on that?
I wish I had a clear answer for you to that one, because just recently, and I'll give you a live example. There was this young couple that called me and said, our bureau score in one place is 800 and the other place is 700. And the lending institution uses the bureau which is given 700. So I'm not getting the best interest rates. I looked at the 2 reports and there was just very little difference. So in fact, while I'm talking to you, I have a pending call with the 2 bureaus to ask them, why is there such a big difference in principle?
Exactly.
Forget this particular case. The case can have its own aberration. There are always outliers and all. But I think, while obviously if it affects you and me, we get upset. Or, if a customer complains and says my score is 800 here and 700 here. But I would think that in 99% of the cases or 97% of the cases, and this is just a random number, it's not a statistic, the difference is not worth sweating over, in the sense. So 750 might be 730 or 770 or something. Once in a while, you'll come across this crazy aberration, That's something that unfortunately we'll have to just live with for some time, whilst the standardization process keeps maturing and evolving and all that.
Okay.
I know it doesn't answer the question pinpoint, but it's the closest I can get to a fair answer.
Got it, Satish. And moving on to the next point is, see, there are a lot of foreclosures happening in the market, and not only foreclosure because of this COVID. The credit bureau, the RBI was told to give a moratorium, right? So there are different statuses of a loan is coming to the bureau, right? So if you can give a brief how it is actually showcasing in the report.
So, if I foreclose the law by going to court or, settling or whatever, the report will show settled or written off or whatever it might be. In fact, now in the new clause that has been added is the moratorium clause also. So people know that there has been Satish took a moratorium, money did not take a moratorium, for example. But if you want more details about the foreclosure and what what happened to the security and all that, you'll have to go beyond the bureaus.
Okay, you need to talk to the customer, is it?
Talk to the customer or the bank where the foreclosure happened. Because again, the bureau at this stage do not report more than what we just talked about, that yes, there was a foreclosure or there was a write-off or there was a settlement and what happened there. And it reflects in the score also, but otherwise you won't get that. Now, having said that, there's also what RBI used to maintain, and now I know the bureaus maintain, is the suit filed account data. So if a suit has been filed in court, that's public data. And that is then separately available with the bureaus also.
So this is applicable for individual as well as for the companies, yeah?
Yes. But individuals, there won't be too many suit files.
Okay. And moving on to the next point, Satish. How many years account will show live for a non-repayment account?
So typically the repayment is over a 36-month period. So you'll see a cycle of 36 months like a moving average. You'll see a moving average of 36 months. So when the 37th month comes, the last month drops off. So typically it's a 36-month cycle.
Okay. And how about the reposition of assets? What will happen of that? Say, for example,
Yeah, so if you repossess my asset and it's it's sold and the loan is recovered, it will show that the loan was recovered. And if there was a settlement or whatever, it will show up there also. You won't get, don't expect much more than that in a bureau report at this stage.
And another interesting question from the survey that we collect is willful default, Satish. Okay, so can you give an example, and is there any chance that while reading the bureau report, right, is it even possible to identify this borrower as a willful default? He has done any willful defaults? Can you give some
case
sample?
Has been filed in court, then it comes under the suit filed non-willful and willful. Willful is where money has the money, he's living a good life, but he's not paying. He's pilfered the money and gone, and the bank has filed a case against you. Alternatively, they might have given you a loan for starting a business, and the business didn't work out in spite of your best efforts. That's a non-willful defaulter. And traditionally, for many years, even before the bureaus came into existence, the RBI very clearly listed out a list of 8 criteria or 6 criteria. What is a willful defaulter as against a non-willful defaulter? Now, that willful and non-willful defaulter, you can't make out from a traditional, standard, normal credit bureau report, because it will just show money is defaulting, Satish is defaulting. If a case has been filed against us both, then RBI has mandated that the bank should specify that he is a willful defaulter or not a willful. So some famous names, as we all know, have been classified as willful defaulters because they've all left the country, for example.
Okay, fine. And coming back to the court case, right? How it is being linked to the credit bureaus? Is that even actually happening, or?
Yeah, the banks are reporting it to the bureau. So the bureaus will report. So when the bank files a case, it just reports it to the bureau.
Okay. And assume that I have a court case, the bank has filed a case to me, and how to come out of the report? What kind of help the lender can do to sort out that case?
Well, the lender is going to say, give my money back to me. Once the lender gets the money back, or he settles the loan for whatever reason, because of some negotiation or whatever, then they will report that the case has been withdrawn or the loan has been settled. It will still show as a settled loan or a written off loan. So if money owes me 100 rupees as a bank, I'll take 60 rupees from you, 40 rupees, I'll say, forget it. I'll write it off. The case gets withdrawn. Then on the next reporting, that suit filed account will no longer show.
How long it will take to get reflected in any report?
As frequently as the banks report in. So the banks will report it, regularly, once in a month probably.
Okay.
So it shows up there. There's always some time lag. Now, globally and even in India, from a technical perspective, you can update data live. As somebody pays, you update it. But in India, that doesn't yet happen, but it happens fairly regularly. Sometimes daily, sometimes weekly, fortnightly, or monthly, of course.
So assume that if I got some issue with the report and I've identified while taking my self report, right? What should I do? What are the next steps that I need to take care?
So the good news is that there are very strictly laid down regulations in the law that allows a person to raise a dispute. Now, there are two ways he can raise the dispute. One, he can go to the bureau and he can say that I dispute that my name is not Money, it is Swami, for example.
Okay.
The bureau will not change data. One thing we have to remember, and this is a sacrosanct statement I'm making, the bureau by itself doesn't change data. For two reasons. One, because they're not sitting here to verify whether Money's name is Money or not Money. Right? They say, please go to the original root cause of where the data came from, which is the lender, who instead of giving me money as Money, gave me money as Swami, for example. Right? Now, the other reason is, and I think that's the more important reason, is even if I as a bureau was to change Money's name to Swami, for example, because he shows me birth certificate and all the evidence, the next time that lender reports, they will again report Money and it'll switch back. So the way to do it is there is a dispute resolution process that every bureau has set up. You go to them, you put in your dispute, the bureau will refer it to the lending institution. You can flag and say that there is a dispute on this case so that while the dispute is sorted out. Now, while the dispute is sorted out, two things after that can happen. Either the bank will say, yes, we agree it was a mistake from our side, we are rectifying it, and they will rectify it and that will get sorted out. So Money's name will come back to Money or whatever it is. The other option is the bank might say, no, I'm sorry, we can't change the fact that he's not paid on time, although he claims it because our records show that he's not paid on time.
Okay. And but by the
all disputes are not necessarily sorted in favor of the individual. There has to be a process and a document trail shown, which, for example, if your PAN card is wrong, you've got to go and show the PAN card. Then that the wrong PAN card got keyed in for some reason.
For assume that the case which I'm raising, it's actually it has been approved by the lender. Okay, but is there any ETA for it? Because I'm actually planning to get a loan immediately, but this raising a dispute, the CIBIL or any bureau will talk to the lender, understand the situation, and then come back to update the record, right? So is there any ETA? How long can I?
30 days. That's the law says. 30 days it has to be sorted out.
Okay. So if it goes beyond...
If it goes beyond 30, then you can go to banking ombudsman and create a ruckus, kind of thing. But again, honestly, if it's a factual error, it can't take more than 30 days. The problem starts when there is a dispute between the lender and the borrower. The lender says you've not paid and the borrower says you paid and you please come and show me and that kind of stuff. Can it happen? Of course it can happen.
All right. And with respect to specific to microfinance industry, right? How credit bureaus are helping it?
Well, the microfinance institutions are one of the prescribed credit institutions under the SICRA Act, and therefore they are members of bureaus. They can pull reports and they can do all that. Obviously, the microfinance data might be a little different. And it might be a little different. We don't know. So there are some bureaus which actually produce what is called a microfinance report. The core of that report has not changed. The core of the report will still have Money's demographics, his loan lending activities, inquiries, the way they go about doing it, and they provide a score and everything. So honestly, microfinance institutions can use bureaus as well as anybody else does. Build it into the credit policy and take decisions based on what they see.
And most of the when I speak to most of the microfinance companies, right, they are very inclined towards the pre-5 mark report. Is there any specific reason to it, Satish?
Just repeat your question. It broke for a second.
No. So I was asking. I spoke to a few microfinance companies. Okay, they are completely aligned towards a pre-5 mark report. Okay. Is there any specific reason they don't want to go with some other bureaus, or they are completely inclined to pre-5 mark? Any reason to it?
Because ultimately, why do you go and buy a shirt from Bombay Dyeing and not from Marks and Spencer's? Each one has their own choice in terms of their quality. So there might be something linked to the quality of the product, the quality of the service, the pricing. There are multiple reasons why it happens. So it's possible that one bureau might, and I'm not going to side against one bureau versus the other, but it's possible that one of the bureaus you mentioned might be giving better service, better pricing, better data or whatever, which the other bureau doesn't. So once you reach a level of comfort, you stay with that comfort. That's a commercial decision, honestly, and a business decision. There's no reason.
And we are seeing a lot of Farmtech companies, Agritech companies are coming out, right? FPOs are coming. So, but do they have access to track the bureau report, or is there any in future, is this gonna come? Is there any view on that, Satish?
So these farm produce groups and all are not NBFCs or not credit institutions as defined by RBI under the law.
Right.
So the short answer is they are not eligible to pull reports.
Okay.
Is there a way forward, going forward? Only one person can answer that question, and that is Nostradamus. He has to look into the crystal ball and tell you. But in globally, alternate data has gone into bureau data also. Right? And what is alternate data? Are you paying your bills on time? Are you paying your utility bills on time? If I'm supplying material to you, are you paying me back on as a creditor to me on time? So these are things that can develop in the future. But like I said, our industry in India is 20 years old. The global industry is 200 years old. So by the time all this happens, many of us won't be alive to see it.
Okay. And recently, 2 weeks back, we have got an announcement from RBI that fintech companies are also eligible to get a credit bureau report, right? So what is your views on that, Satish?
So I think if you read that circular, and we all have seen it, I'm sure, they're talking about fintech companies that work with NBFCs to provide processing facilities or scoring or whatever. And they've laid down a whole set of rules, both in terms of capital, structure, ownership, etc. And of course, when you start doing it, the bureaus will make sure that you have data protection in place and all that. So I think it's a good move, if I am, for example, providing services to bank A, where I'm processing the file and bringing it to some half-baked situation, I see no reason why, provided you build into this thing that there is no abuse of that data.
Okay.
It will be used only for your client. So if I'm servicing bank A, I can't be pulling it for bank B, although they don't have an inquiry or an application from that person. I think it's
so
a good move.
There will be a proper audit will be done by the bureau agencies, right?
Like you said, the circulars just come out, so I don't even think it started, and I don't know what's happening there. But I'll be surprised if there isn't a appropriate check and balance in place.
And so from your experience, right, what credit bureau is used by most of the lenders? Is there be any classification? This bureau is best for this particular loan product. If you can give suggestions on that, it would be great help, Satish.
I can't take sides on which bureau to use and which one not to use.
Okay.
So I think it's for each lender to evaluate like you would do for anything else. If there's a multiple choice in a competitive market, whether it is anything from consumer goods to airlines to hotels to brands or whatever, you evaluate, you choose, so that's the way it should be.
And is there any statistics on how many lenders are actually submitting the report on a monthly basis? By the way, before that, how many types of financial institutions, like you said, banks, NBFCs and HFCs, similar to that, how many lenders are actually submitting a report on a monthly basis, and what type of financial institutions are there?
So if you look at the SICRA Act, and I can pull it out right now, wait a second. So I've got the law in front of me, right? And if you open that act, it defines very clearly who is required to provide data. So it's a banking company, a corresponding new bank, state bank, subsidiary, cooperative, nationalized bank, non-banking finance company, public financial institutions, financial corporation established by a state under State Financial Corporation Act, housing finance regulated and licensed by NHB, companies engaged in the business of credit cards and other similar cards, and any other institutions which the Reserve Bank may specify from time to time for this purpose. So if you add up all these categories, that's the number of banks and institutions that are providing data.
Okay. So the quick time check, Satish, we have got a lot of questions from the audience. I'm just pulling out one by one.
Sure.
So there is a news that the PCR public credit registry may replace credit bureaus. Any idea on that, Satish?
Yeah, so the public registry has been in the talks and pipeline for a while. I know I spoke to somebody in RBI and with the vendor, and this was just when the pandemic hit, so there was a little bit of a slowdown on that process. The RBI committee had put out very clearly what the public credit registry should do. Now, let's step back here for a minute. Globally, there are three models that exist. Sometimes there is a public registry and a private bureau which coexist together, having similar data. I'm not going to say same data. And the bureau is used by lenders to take credit decisions commercially. The registry is more a repository for the central bank, the government, the finance minister, the states to get economic trends and financial trends like interest rates, credit card usage, and that.
Okay.
Which RBI used to collect data through monthly, weekly, fortnightly, and annual reports. So this goes into a registry. Then globally in these countries, bureaus can also get alternate data, whereas registries will only put in banking related data. Right? Now, in some countries in the Middle East, I know there is something called a registry, but it operates also like a bureau. A little bit of a hybrid, a little bit of a mixed up. Now, in India, when I saw the credit registry report originally, my first reaction is that they are taking on the bureaus head on.
Okay,
right?
okay.
They are going to actually threatening to replace the bureaus, which is not the intent of a credit registry in general. Now, I don't know where it is now. I mean, in terms of, the vendor was supposed to have moved forward. This is about a year ago when the second pandemic wave started. And we were hoping that there will be some announcement and rationalization so that the bureaus and the registry, which is one, can actually coexist, which is what the intent was and should be. If the registry comes in to replace the bureaus, then you're kind of, chasing your own tail in that sense, because, you have the bureaus who are doing a fantastic job. The registry will do what it is supposed to do, and it will isolate the two. The concept is not similar, that you get data and you give out data, but the user is different. The bureau, it is the lending institutions, the commercial lenders, the housing finance companies. In the case of registry, it's the government, finance ministry, budgets, RBI, that kind of stuff.
Okay.
So let's see. I think we just have to keep our fingers crossed. If and when the registry comes, it comes with the right intent and therefore action.
So another question which we got is, most credit bureau companies are also doing cross-sell based on the reported data through subsidiaries, which is almost a breach of data privacy, right? So why is not being offered by the bureau themselves as a service? They can give us a SaaS option. They can give some kind of a report kind of an options, right? So any thoughts on that, Satish?
So the law very clearly states that what the bureau can do, and more importantly, what the bureau cannot do. Now, because it's very clearly said what they can do and what they cannot do, the bureaus will start finding ways of beating that.
Okay.
Honestly.
Okay.
That's your question.
And what about this alternate data, right? So, I mean, so 20 years before you would have seen a report, and today you are seeing a report, right? How far it has been different? How it has been evolved, Satish?
So the contents of the report have not significantly evolved at all. Obviously, the richness of data has changed as more and more banks have become members and more data has come in. The score came in, for example. When we started, there was no score. It was just the report. Now, alternate data is, like I told you, insurance premiums on time, telecom company, or your bills on time, your club bills and all that also goes in there. Utilities. All that at this moment in India is not happening, right? When we started the bureau industry 20 years ago, we started talking about alternate data. We're still talking about alternate data, right? Because there
when that's going to happen?
There are lots of intricacies involved. There are legal issues, integrity of data issues, confidentiality issues. Now, if I'm reporting data, RBI today can monitor what a bank is reporting. But a trader reporting data, I don't like money, I will go and say that he's not paying on time. Money will dispute it. There's no regulatory body which can sort out that. So alternate
Right.
data is, according to me, some miles away, significantly. Right.
Mm-hmm.
Now, the important thing is, I instead of worrying too much about alternate data, and now people are looking at my Amazon payments data to see whether I pay on time or not. People are looking at my Facebook data and all that also. Now, all that they can do offline, but as a bureau, you're not allowed to do that. Right? I think the lending industry and the fraternity that is on this call should more be concerned. How can they really use bureau data with the purpose of improving quality, improving book size, and improving TAT? We've got enough data now, which is going to make your life so much better than what it was, say, 15, 20, 30 years ago. And that has not yet reached its level of perfection that, all the lending institutions actually use the bureau data. Today it says, you got a score of 750, give him a loan. If he's less, don't give him. That's not that's the simple way of breaking down what to do with a bureau report or a score. Right?
Yes.
Like I said, even with a lower score, I can give you a loan. But the trick is to charge a higher rate because the risk is higher.
Risk has been, right.
I mean, my score, for example, is about 840 or something. But if I default on my credit card, I'll still pay the same interest that you, money with 600, can pay. That's not correct. So the risk-reward equation is the next level of maturity that the lending institution has to reach. And I'm seeing signs of it. Today, when I'm driving into office, I'll suddenly see one lending institution says, linked to your credit score, your rate of interest will be 6.4. Fantastic. That sounds like music to my ears, because that is what is all about a bureau. That if I paid on time, you should reward me.
And Satish, so you are saying about your report, right? So I understand all 4 bureaus are starting from 300 to 900, right? The scores ranging from 300 to 900, correct? So is there any person in India who scores 900?
I haven't seen one of 900. I haven't seen one of 300 also.
Oh, is it? Right? Okay.
But like, for example, I can tell you my score is 840 something.
Oh,
right?
okay.
It's a pretty good score. But then I pay my credit cards on time, or at least my accounts team pays the credit cards on time and things like that. I've seen people with higher scores because also I have a history of having taken a car loan, maybe, or a housing loan, so that also impacts my score. But so I have as good a score as anybody can get. Is there a 900 score theoretically? About 5 years ago, I had asked one of the bureau people and they said, we haven't seen one.
Oh, even the bureau itself doesn't see anyone, is it?
That means there is no score of 900. No, it's like...
Okay. So what is the maximum score that anyone would have got? That is you, I guess, 840, I guess. Huh?
I'm sure there is an 899.
It could be, huh?
It's possible. If there is a range of 300 to 900, there must be. But you're going to be really bad to get 300 and you're going to be really good to get 900.
And moving on to the next question is, so why is the real-time reporting of lending is not possible? Somewhat similar to, say, a stock exchange for every individual person, right? So there are multiple individual,
Yeah, but you have to understand that there, we have got foreign banks, private sector banks, old private sector banks, public sector banks, nationalized banks, cooperative banks with different levels of technology. They've got some legacy and all. So, and they're giving loans all across the country. So to link all that into either a central or a sub-central database and then to feed it to the bureaus is not going to happen overnight. So we have to live with that. But I can tell you that from the time that we started, there's been significant acceleration of the reporting cycle.
Okay. And assume that, I think this has been already addressed, but if you can give more light on this question will help us, everybody. Like, say, for example, I keep hitting my bureau for applying a loan from two or three different institutions, right? So it's keep decreased, or whenever I like to take a score on my own, will it not decreased? So can you give a...
No, it won't. If you pull your own report, it's what they call a soft inquiry, and that doesn't impact your score.
Even I do multiple times, is it?
Yeah, but if you do more than one a year, you're going to start paying for it.
No, there are a lot of free portals available, Satish.
Those free portals, sure. But yeah, if you self-inquiry, you won't.
The score
But
will not
the
get
free-
reduced, is it?
But if the free portal is registered with an NBFC, which is pulling a report on your name, then it's not your inquiry. It's an NBFC making an inquiry on you. In which case, of course, it will get impacted.
Okay. So I'm another is an interesting question on the legal side. I am a lending institution. Okay. Is it I'm going to give a loan to a person X? Is it really mandate that I need to get a report and then only I can give lending to him, or I can give a lending without even taking a report?
Well, it's not in the law, but I think in practice it is that you should pull a report from at least one bureau.
Okay, it is a mandate, is it?
Yes, as much as a mandate as RBI can give, because RBI always suggests that you do this. But the regulator is suggesting, which means you might as well do it. And I think it's now a practice. It's almost automatic.
And this is the subsidiary question of Karthik Swaminathan, who has asked, like, if I'm going to do a cash flow based lending, right? So why do I need a bureau report for that?
Because I can only say that past behavior is the best predictor of future behavior. Cash flow might be very good, but even it might have been very good in the past also, but I'm still not paying on time.
Okay. Even though if you're doing cash flow based lending, Karthik, I think the past history matters a lot.
It's like, you go to a doctor and the doctor says, in the past you've never fallen sick. But why do you pull a report today? Because, it gives you an indication of how it's going to be in the past. I think the two are absolutely coexisting with each other.
Okay, got it. And how actually the restructuring impact the credit score as the delinquency after restructuring, Satish?
So the recent moratorium that was given and the consequent restructuring, the RBI very clearly said, do not let it impact the score.
Okay.
But if there is a restructuring otherwise, of course it impacts the score. In the pre-pandemic days.
Right. And another question is, in credit vision score, often a person with a high number of non-mortgage debts have a low score than a person with a written off suit filed accounts. And why is it so?
Say that again. You said what? That often
the person who's having the high number of non-mortgage debts, right, have a low score.
Because it's an unsecured loan. And unsecured loans by history are traditionally.
Okay. So I'm moving on to the next point, Satish. Cooperative banks are actually included in the system.
Just 1 second. Just 1 second. Give me a second.
Okay.
Keep quiet. I'm hearing voices in the back. Can it not wait? I mean, what is it? Sorry, yeah. So what is the question you asked me?
1 second. Now, cooperative banks, are they included in the system, or are they not? Yes, they are. Okay. This is an interesting question. For certain banks, I can clearly see that their name is coming. Say, for example, State Bank of India, I can see the bank name in the report. But for certain NBFCs or for smaller banks, I think the name of the banks are not showing the report, Satish. Why?
So, you probably saw me start smiling as you asked the question. And I now know how a candidate on Kaun Banega Crorepati feels when the question, before it is completed, he knows the answer to that question, So he says, oh, good, this is a question I can answer. So the reason is there's something called the principle of reciprocity. What happens is that each bank can decide whether they can show their names or not show their names. The rule then is that if you decide to show your name, then when you pull a report, every bank that has agreed to share, you will see their names. Right? But if you have said, I don't want my name to be seen on the report, then even if another bank has agreed, you will not get it because you are not showing your name.
Okay.
How this started originally was the insecurity that banks thought about poaching of clients.
Okay.
You get it?
Yeah, I got it.
So that's why you will see in some cases names, in some cases you will see credit card company or something like that.
Something like that, yeah. And how much does my status as a guarantor affect my rating?
It does. So if you're paid on time, if you're the loan you've guaranteed defaults, then your score starts going down. Because the liability is yours. Although it's a contingent liability on a default, but it is yours. So if you're going to guarantee one, you should be careful who you're guaranteeing.
Okay. Just quick time check. I think we have only 15 more minutes to go. I think points to audience, like if you want to have any questions, please feel free to post it here. Shiva Shankar from our team is moderating those questions.
I've seen a lot of questions and I know we haven't answered all of them, obviously.
Yeah.
So I don't know how, you're going to leave some people disappointed, but I guess that's the way it is, which is a good sign. A lot of people are asking questions, but what I can do while you are waiting for Shiva to kind of look at it is I can put my email address on the post. So if people want to ask specific questions, they are free to write to me and I will answer back.
Perfect. And Satish, before getting into the next set of questions, if you can give a small overview about Athena Elearn, then it will give an overall idea about the audience that will benefit them as well.
Sure. So Athena Elearn was an idea that started after I came back from Dubai, where I was working with Dun & Bradstreet after CIBIL. We set up credit bureaus like Dun & Bradstreet all over South Asia, Middle East region. And we do consultancy. So we do three things. One is we consult. Who do we consult to? We consult to banks, NBFCs, housing finance companies on their processes, policies, credit underwriting, application form redesign, how a file flows, because that's what I've done all my life at HDFC. Then the second thing that we do is that we also have created an e-learning platform last year. So we have a series of 8 modules in housing finance, credit policy, processes, the maths of housing finance, the laws of housing finance, and so on and so forth. Securitization is coming up now. Recovery is another module we'll have. These are B2C modules. People can go subscribe to them and they get 1 week, 3 weeks, 4 weeks to learn anything that they want to, and they get certified by us. That makes them more job ready when they go out to get a job. Most companies are using us also now to train people who are getting inducted into the organization also. So we have one set on housing finance, we have another set on credit information, and we have one other set being launched next week, literally, on soft skills and behavioral skills. So non-verbal communication, team management, conflict management, and all that. So that's so my email address will come up, in the next 2 minutes on this, and so will the link to our website. So I would encourage people to have a look at it, and of course they can always contact me because my colleague is going to just put in the email address. Okay? Yeah.
And I personally recommend the audience to definitely go and check Athena Elearn. I myself attended a course and it was really useful. Okay, coming back, Satish, there are so many questions popping out. We'll try to cover as much as possible. Okay.
Yeah, sure.
Yeah.
I'm just making sure the email is put up. Just give me a second. Okay. All right. It's come up there. The email is there. Please raise your queries. And, anybody wants to know about us more, please go to our website. In fact, this weekend on Saturday, we have a fireside chat where we are talking with one of my knowledge partners. What we are offering, therefore, there is a 1-hour seminar or a webinar or a fireside chat, which actually allows people to understand not only housing loans, credit reports and all, but also savings, financial planning, and the other side of the balance sheet. So that's the combination that is available. That link has also been provided on the website, and you have my link. Like I said, I know a lot of questions have not been answered. Happy to answer them also. Yes, Mani, sorry.
Yeah, cool. And yeah, so I'll come back to the questions. So we have 10 more minutes to go, Satish.
Sure.
So another interesting question is there's so many fintechs, right? It could be Bharat Pay, Liquid Loans, and there's so many fintechs are evolving, and people are getting loans from those platforms. And there are line of credit is there, personal loan, unsecured personal loan, quick 10 minutes loan. There are a lot of fintechs are giving loans. Is it really affecting our scores if we get a loan from any fintechs like this?
Yes, if the fintechs are now members of the bureau and they're reporting, then of course it will impact your score. So, you know, now, as you know, there's a new phenomenon that's this buy now, pay later that's come up now recently. Right. And in fact, the RBI is looking at it very closely to see if there is a need for a self-regulatory or a regulatory body in that also. So yes, if you've taken a loan from a fintech, then if you've taken a loan from any of these fintechs and if they're reporting to the bureau, if you don't pay, of course it shows up. So if my advice would be, if you're taking a loan from any of these, make sure that the fine print is read properly. You know what the interest rates are and things are going correctly for you.
Okay. And assume that it's going to be a P2P platform, right? Where individuals can invest in any of the borrowers, right? So how bureau report plays a role there? Is it really matters?
As you know, about maybe a couple of years ago, P2P were also classified as a form of NBFCs.
Right.
And they were required to have minimum capital and all that. Now, one of the reasons that was done is because now they can be eligible to provide data to the bureaus. So if you've taken a loan from a P2P and you're not paying them back on time and the P2P is now a member of the bureaus, that data will also be there in the system.
Okay. And investing on a platform like Grip impacts on credit scores, Satish?
No, if you invest in a platform, it doesn't, because that is not reported into. But if you've taken a loan to invest into a platform and that bank reports that loan, of course it will impact your score, good or bad.
So how can we increase the confidence of the bureau data? A lot of challenges from Mohit, and he pushed back from the business while trying to use bureau data for CA regulations. And as per them, reported exposure was vastly different from the information they had from the customer documents. So I think this is one of the questions that has been asked earlier. So there is the mismatch between the documents what the customer has been provided and the data which is there in the report. So how do we encounter that, Satish?
Dispute resolution, that's the only solution. Because see, you know, today afternoon I was talking to somebody in another context, and he said that 30%, and I don't know where the number came from, but 30% of qualification certificates are forged. Now that's 30% shakes me up, you know. It's a very large number. So if you can forge qualification certificates, forging income tax returns and all is very easy. Bank statements is very easy. So that, you know, that's why most lending institutions now have what is called a fraud investigation unit. Most lending institutions will do cross checks with bureaus to confirm whether the loans in the balance sheet and the loans in the report are the same. Then you have other, you know, you have software companies that provide analysis of bank statements without mentioning names. So all this are all enabling to come closer to minimize fraudulent data, fraudulent information, fraudulent documentation.
Okay. And what is the reason for fetching too many PAN numbers with their loan data when we are searching data with the only PAN with the applicant borrower? So this is happening actually for a commercial report, Satish. This is a question from Pallavi.
Yeah, but unless you're getting data from for the PAN numbers for the directors also, if they're linked. That's the only reason I can think, because the company will also have one unique PAN number. So I'm not sure I understand the question completely, but if it is for commercial bureaus, then I suspect it might be because you're also getting PAN numbers of other associated stakeholders like shareholders, directors, etc.
Okay. And one more question is, why overdue at the time of pulling the report affects more even if the DPD is less than 10 days compared to the past DPD more than 60 days during the past?
So more recency of delinquency is more impactful. You know, if you defaulted 3 years ago and you're defaulting today, obviously today's default is more serious in terms of its impact on the score.
All right. I think we have come to the end of the session, Satish.
Okay, great. Thank you. It was really good. And I'm sure we have left many unanswered questions, but my colleague has put up the email address and our website. So please, I would encourage you to write in if you have any questions or any queries. I will guarantee you an answer. I'm not going to give you a tat on when I will answer, because it depends on how many questions come in. And of course, anybody wants to see what we do on the e-learning platform, that website has also been put up there.
Sure. And on a closing note, Satish, so there is a recording which is there, and we'll be posting that in YouTube and Facebook, and you can send your messages there. And finally, to give a background about our company, we provide a digital lending solutions to NBFCs and Fintech companies, where the disbursement of a loan will be happening in 10 minutes. So feel free to reach us also if you have any queries on the digital lending solutions. Thank you so much, Satish. Thanks for your time. It was nice talking to you.
And I hope I left you a little more knowledge or a little more confused.
No, Satish, it was a wonderful session, and thank you so much. We like to have much more sessions with you for sure. Okay.
My pleasure. Anytime.
Thank you, Satish. Thanks for your time. Nice talking to you.
Thank you very much.
Bye.